It's loading. I guess it takes a minute. Great. Yeah, we're live now. Everyone, welcome to our session on Venture Capital 3.0. E and Barbara, thanks so much. It's awesome to see your faces and to catch up with you guys. I think most of the people in this session, I was just looking at our audience. We've got a pretty diverse group of people. Anyone who's involved in this space will know these two people. We do have some people joining in who are maybe using this platform as an opportunity to learn about that space. So I'll take a minute to introduce you guys. But just wanted to say, first of all, thanks for joining. Where is everyone?
So I'm in New York right now.
Great, and you're in Lagos.
I'm in Lagos, yes, I'm in Lagos.
Yeah, great. Well, look, I entitled this session Venture Capital 3.0. This is kind of my just way of thinking about trends in African venture capital right now. I'll explain. In my mind, venture capital Africa 1.0 was an era when most global capital markets were interested in Africa in terms of commodities and infrastructure. Tech investing had an outsized picture of risk and maybe an undersized picture of opportunity. And it was the space for people with large risk appetites looking for risk-adjusted returns. VC 2.0, in my mind, was when global markets and investors started to take notice, started to understand the opportunities, the untapped market size, and a lot of global capital, particularly from Silicon Valley and London and elsewhere, started to invest in African tech, with fintech, of course, taking the lion's share. 3.0, in my mind, is what you're doing, what you're representing, which is a new face of venture capital. It's the emergence of African capital for African technologies. And so it's great to have two of the vanguards of this trend here with us today. Just by a short introduction, you're both very well-seasoned entrepreneurs, investors, innovators. If I read your bios, you would think both of you are, 60 years old with gray hair, but that's obviously not the case because you're both very young. Make me wonder what I've done with my years on this earth. But I'll start with Barbara. Barbara is a very experienced growth equity investor, an entrepreneur with about 16 years experience in financial services. She was a venture partner for Lateral. She was managing director for Elements, an AI-enabled identity company. She's on the board of AppZone, which is a B2B fintech infrastructure company there in Lagos. And famously, she was a founding member of Atlas Mara, which is, of course, Bob Diamond's platform, which was the first SPAC for Africa, and really the first fund to raise $1 billion for investing and operating financial institutions. And before that, JP Morgan, UBS. Recently, she has launched a new fintech fund for Africa, Unicorn Capital, and we're eager to talk about that. So welcome, Barbara.
Thanks, Leland.
Quick introduction for E, who needs no introduction. E has founded and raised two of the most significant companies in the Africa tech space. Has been a juggernaut of fundraising and scaling up companies. From 2016 to 2018, he was the CEO of Flutterwave, which of course is represented here at this summit and all of our fintech summits, and is one of the fastest growing payment technology businesses of all time, with over 2 billion across 50 million transactions. Investments from Y Combinator, Greycroft, Greenvisor, among others. Before that, Ian co-founded Andela, which of course raised investments from Mark Zuckerberg, from Google. The list is very long in terms of other companies he's started up. His involvement in Nigerian politics and entrepreneurship and public interest, and most recently has also started a fund called Future Africa, So Ian, welcome as well.
Thank you. Excited to be here.
I'll just mention to our audience, please, we're going to have a Q&A session at the end. So go ahead and any questions you might have for E or Barbara, include them in the chat, and I'll try to collate them and ask at the end. So keep your questions coming. But maybe to kick things off, I'd love to ask you about your funds, Unicorn Capital and Future Africa. Just what the thesis is, what compelled you to create your own funds after having created businesses and invested in other ways, and just what makes these funds different. Barbara, I'll start with you.
Sure. So for me, I've pretty much done a lot of different things, from venture capital, investment banking, private equity, and then I sort of built a startup in Nigeria. I felt that after working with a lot of fintech startups, I sort of saw and just startups in general, actually, I saw a bunch of common themes around the fact that a lot of startups struggle with fintech. They struggle with access to financial services, access to the ecosystem. They struggle with how to leverage fintech, frankly, to grow their businesses. And for me, I remember always saying this every time I looked at a company. I always used to say every tech company should be a fintech company. Because essentially I was saying that, if you're in healthcare, why aren't you leveraging financial services? If you're in logistics, why aren't you leveraging financial services? These are all revenue streams, because the market is so limited when it comes to financial services that to really grow and expand your businesses, you have to address these gaps. I always say that in Africa, when you build a house, you're not just building a nice house and with all these nice furniture, and all of that, you're building a water system, you're building an electricity system, you're building all the nuts and bolts, right? And every startup pretty much has to figure out how to build all these infrastructure voids that the market has. And fintech is a big part of that. And so that really led me to sort of say, how do I create a fund that addresses this holistically across all sectors? Because fintech, for me, I believe is going to it does power the digital economy, and it's going to be the future of finance in the next 10 years. And we haven't even scratched the surface. And until we have like basic financial services in Africa, fintech isn't a hype. There's so much to be done. And so that's really the center of the fund. Fintech has a thematic investment approach that we're taking. We're also trying to help create a synergistic portfolio and make it sort of in a way where companies can cross-pollinate with each other, they can leverage each other, and also provide that access to the ecosystem. So for me, I've spent a lot of time, obviously, with traditional banks, traditional corporates, and there's this gap between the startups and that traditional world, and I'm trying to close that gap. So I have partnerships with some banks, with some telcos, and I'm trying to bring all of that to the startups that I work with. And then more importantly, the biggest opportunity in venture capital that I think private equity didn't really see as much of is exits, right? I've been in this industry for a while. Private equity was a big thing, and now venture capital is the big thing, right? And a lot of it is because we're seeing more exits in venture capital, and a lot of those exits are coming from fintech. So a key part of the strategy for our fund is how do we make our companies strategically valuable to the industry for exits? And so you have to work backwards. You have to think about what you're trying to create, what people want, and make sure that these companies are delivering that. And so that's the end-to-end thesis, from how we invest in terms of a synergistic portfolio, how we create value in terms of domain expertise, access to the ecosystem, and how we derive exit opportunities. But fundamentally, I felt like I had no choice, honestly, to set up this fund. And we'll talk about diversity and what's going on in the ecosystem. Frankly, raising a fund is probably the hardest thing to do. And being an entrepreneur is a lot more lucrative than raising a fund. So this is really not what I necessarily, the number one thing I wanted to do, but it was a natural evolution for me. And I frankly felt like I had to. And I'm really happy to see E and a lot of entrepreneurs. I think entrepreneurs are the best type of investors. getting into this space, because like we'll talk about in the session, but I think venture capital needs more local operating champions, local investors, and people who actually frankly know how to run businesses in the continent. And that's not what's, unfortunately, most of the venture capital isn't coming from there. So yeah, I'll stop there for a second. Leyland, I think you're on mute.
Okay.
Yeah, thanks, Barbara. Yeah, a couple interesting points there I want to come back to, but let me kick it to E. E, can you tell us a little bit about Future Africa?
Sure. I was just taking some notes here. The Future Africa is actually called the Fund for Africa's Future. So it's more than just just a traditional fund. I wouldn't call myself VC necessarily. We look more at everything from an asset management point of view. So, when I talk to investors about what we're building, we think about ourselves more as a SoftBank or BlackRock for Africa than we think about ourselves as like a Sequoia or Andreessen Horowitz. Just in terms of what the differences are. But ultimately, like our fund exists to create a platform for supporting innovators that are taking a stab at Africa's biggest challenges and turning them into global business opportunities. And ultimately, our goal is to support these innovators to build a world where prosperity and purpose is within everyone's reach. And we provide to these entrepreneurs specific kinds of support, right? Which include capital, but that's not the whole story. We try to provide to our innovators access to capital, but also coaching and community that enables them to be able to turn all these Africa's challenges into global business opportunities. And our thesis is really that Africa is central to the future. More than half of the world's working population over the next 15 years is going to come from Africa. And we got to figure out by leveraging market creating innovation, which is kind of the category of innovation that has been largely ignored, as opposed to efficiency innovation and kind of like like just enhancement innovation, so to speak. We want to focus on market creating innovation, the sort of things like the mobile phone. We want to focus on things that are absolutely transformational in the ecosystem, that come from a background of applied research, fourth industrial revolution technologies, and a deep understanding of how these scientific and technology breakthroughs can be applied in a commercial sense. So that's kind of our focus. So we're more on the hard parts of this thing, not too focused on, say, fintech or any of the more sexy field. But I think most importantly, we're tapping into a desire for both, local and diaspora investors to identify asset classes that are both high impact and high return. So it's no longer just about making money, as it was with the last, batch of PE folks, right? It's now more about how can we leverage our capital to create a more transformational outlook. And neither is it just about ticking ESG checkboxes, as it was for the development folks, but it's more about how do we actually combine the two to identify high impact and high return opportunities like the mobile phone industry, so we can repeat that miracle again and again and again. So that's what we focus on. We focus on identifying the innovators working on super difficult challenges and supporting them with capital, coaching, and community so they can turn those challenges into global business opportunities, and connecting them to an ecosystem of capital, in particular from investors that are seeking high impact and high returns. So that's kind of the big difference. And we operate primarily as a network of funds. So we have currently about we have an interesting structure. We're a no fee fund, so our primary approach is not to take any fees. We are membership based. So we have a community of about 120 co-investors who we send 20 deals a year, and they can invest in those deals from a minimum of $5,000 through our syndicate fund on Angel List. And then we have the rolling fund, where every quarter we have a number of investors entrust us with their capital to make early stage investments on their behalf on companies that we think have the potential to turn significant challenges into global business opportunities. That's what we do.
Yeah, that's really interesting. That's both of you have unique models. And also, E, I'll get the name of your fund correct, Fund for Africa's Future. That's a reflection of the fact that my team and I talk about you so much that we've actually kind of created a shorthand for it. So
that's like his
both
name.
of you have kind of, yeah, that's right.
Yeah, actually, it's not quite as accurate. I just like people to know the full name, so they understand that we're not just a venture capital fund. We look at ourselves as like a high impact and high return World Bank of some sort, right? So basically, if the World Bank and SoftBank came together, what kind of impact and return would they be able to deliver, right?
Yeah, no, that's an interesting analog, and it was good to hear kind of the way the network of funds work. That there's a syndicated fund and that's membership based and no fee. You've both kind of alluded to the process of raising capital. I know, E, you're raising basically members and syndication. I'm curious to know, E, how has that been? And Barbara as well. What has it been like to raise money? E, you've raised money as an entrepreneur. What's it like to be raising in a kind of a different environment? And I'll ask you both is, what are you, Barbara, I assume you're looking at more traditional LPs. Who are you looking for? What has the process of fundraising been? And are you seeing pent-up demand particularly among Africans and diaspora investors who maybe didn't have, who weren't sort of recruited into these funds previously?
Okay.
Barbara, I'll start with you.
Okay, you start with Barbara.
Yeah, so for me, my background is really around institutional money, right? The biggest thing that I got excited about with Atlas Mara was it was a permanent capital vehicle on the London Stock Exchange, and a lot of the investors had never invested in Africa before. And so for me, I'm trying to tap into that liquidity out there that obviously is not going to Africa, that's going to the soft banks of the world and everywhere else. So I'm looking at all the traditional guys, whether it's the financial fund of funds, family offices, DFIs, but I'm also looking at strategic players, because more and more the strategic corporates are putting a lot of money into this industry. I mean, you can even say that SoftBank is a corporate, right? These are the guys that are really staying private for a long time. They're not, they have a lot of cash on their balance sheet. And so they are actually going to be deploying capital into funds. And then from a fintech perspective, pretty much every part of our strategy relates to fintech. So the fundraising strategy also relates to fintech in that there are a lot of companies that want access to these innovations. They want access to these companies. And so we're also tapping into that. I think you have to, right? I think the fundraising game when it comes to venture capital in Africa is completely ridiculous. It's really hard, both on raising money for a startup as well as raising money for a fund, but our fund is even worse. There are like, 3 or 4 venture capital funds that raised money in the last 2 years. When you mentioned venture capital 1.0, I was sort of like, was there a venture capital 1.0? The first VC fund was really raised in the last couple of years. So a lot of DFIs don't have venture capital capacity. They don't have, they're not looking at VC funds as they had with private equity funds. And then the global community hasn't sort of embraced venture capital funds in Africa because there's no track record, right? Only a few funds were set up in the last couple of years. There's a lot more track record in private equity, and that track record hasn't been the greatest. So as a venture capital fund manager, you're struggling with the fact that a lot of institutional memory is around private equity, and there's not much track record around venture capital. And so it's very hard to fundraise, and that's why we are focusing on strategic players, guys who understand these innovations, and as well as the traditional financial investors. But fundamentally, we are trying to open up the market, open up that institutional market where we can start bringing in new players into the VC community. I mean, local investors is another conversation, and I would love to hear E's strategy around crowdsourcing diaspora and local guys. But I feel like for me, with my institutional background, there's just still a lot of untapped work to be done on the VC side with institutional investors. Does that address your question, Leland?
Yeah, yes, it does. Yeah, thanks, Barbara. E, what has that process been like for you?
It's been very interesting because when people think about venture capital, they tend to look at it from the lens of a financial services professional domain, which is kind of hilarious. Primarily because, financial services professionals don't know how to build companies, right? Operators are typically the ones in that domain. And so I think we're in kind of a phase in the cycle where people are still looking for the investment professional who's going to make investment decisions and lead the firm. And while I admit that an understanding and the capacity to execute against numbers is extremely important, and there are people on my team that can do that, it's been interesting for me because I don't think people have expected an operator-led fund to really take off. I'm talking about that's the institutional perspective. So when I started, I kind of went the path of the institutional folks. And even though I had delivered great returns for them and returned capital, and we have a great angel track built over 5 years with, we've done about 147% IRR. We've already returned capital that we invested multiple times, but they still didn't think we were the right people to be raising a fund. They would rather kind of work with either somebody who'd been at a big company or somebody who wanted a finance professional. So I think at a point we now had to make a decision about whether we want to collaborate with the institutional funders or whether we want to make a play at disrupting them. And so our play was really that it made more sense to rebuild the capital stack rather than collaborate with them. Well, let me not say rather than collaborate with them. I mean, we will still collaborate with them, but basically, we need to have a clear approach to rebuilding the capital stack. And so our approach to doing that was basically, where does the money that these international LPs or local LPs, where does it come from? And it comes from people. And they're receptacles for that money, and there's an expectation that they're supposed to redistribute that capital. And so we decided, and we know that there is a pent-up demand for high impact and high return opportunities. And we know that there is a supply of startups like the ones that we've built with Andela and Flutterwave that have the potential to deliver high impact and high returns, so that it's not a binary choice between the two. And so, we decided to go make that case to folks. And I'll tell you, that was the best decision we made, right? Rather than wait for the institutionals, just going straight to the people and making our case to the people has been the best decision, because it gave us an opportunity to not just build an interesting relationship with our co-investors, where, we make enough to run our office from just member fees, $1,000 a year. And we have, easily 120 investors, and we're actually holding back another 450 who signed up and want to join, but we kind of want to just manage the traffic. And last quarter, which was our first full quarter, we deployed $1 million to companies. We funded now about 12 companies in the last year, which is way more than most folks get to fund, with an average check size of about $150,000. So we've actually, it might not seem like a lot, but I feel like we're really making a lot of progress in terms of hacking the capital stack and rebuilding it for Africa. And we want to push more aggressively in that direction. That's why we're not a typical venture firm. We're more like a startup that does offer venture capital services, and continue to push in the direction of providing guidance to local sources of capital who are looking for fairer ways to allocate capital to innovation. And what do I mean by that? I mean, when we talk to a lot of folks who are higher up in the stack, pension funds and national sovereign wealth funds, what they tell us is, look, we give money to these finance folks, and after a lot of prevarication, they just eat their fees and leave us high with no deals. Meanwhile, we know there are deals out there, and we know people are able to get return. And they're looking for a model that is respectful of their capital and alternatives to deployment, and that gives them an opportunity to be able to actually deploy into deals at their own pace and with a lot of control. And I think that's what people are excited about what we offer, which is, our ability to actually do the work that the firms are being given the trust and the capital to do, but are refusing to. And basically go at it from the point of view of, look, I understand you want to invest in companies. Here's 20 companies a year you can actually take a proper look at that are appropriate for your stage and all that. We do all that work up front in exchange for a membership fee. And if you make an investment, then we're aligned with you because we have carry. So we're not going to suggest stupid companies to you, because we actually want to make carry on the deal. So we want to only give you the best companies. And then more importantly, we're also able to offer the portfolio management as a service, right? Because, we're able to provide to the companies other coaching and community services as they wish. So I really think that ours is really an attempt. I mean, we encountered a lot of obstacles raising the traditional way, and we're sure that, especially post-COVID, the landscape is going to completely change. It's just a matter of time, and we've seen disruption happen multiple different times, and I think it's come to venture capital. And so for us, our own priority is, how do we recreate or recraft the capital stack in a way that gives power back to Africans, in a way that gives power back to founders that are solving difficult problems, and in a way that enables limited partners, the people who actually hold the capital, pension funds and sovereign wealth funds and individuals, to not have financial services professionals interlope and just earn fees for doing nothing.
I'm laughing about
Go ahead,
this.
Barbara.
This is all very interesting conversation. If you want me to address what he just said, I think as a financial services professional, I'm not sure that everyone is taking fees and not doing their work, but I get everything that you're saying. And I honestly believe that this is a very old legacy, traditional industry that needs to be disrupted fundamentally. But it's I think there's some things that can be done to not necessarily disrupt it completely, but to just like to get access to a lot of this pool, a lot of this capital that honestly is just sitting down and not doing anything. And Africa needs that because we have such a dearth of capital that we do need all these innovative approaches. What I will say though is the financial services professionals are all coming into the tech space. Like I just said, private equity has not done what it's supposed to do. So a lot of private equity professionals are coming into tech. So it's going to be interesting to see how all of this is going to play out. But they are all trying to eat, the lunch that, all of you guys have eaten. So we'll see.
Yeah, interesting.
Well, my advice to LPs, when they see financial professionals, service professionals that are coming into tech without a history in it, is to definitely run. Because you're going to lose your money. It's just a fact. They lost money in PE, and there was no remorse about it. They're going to come to VC and lose money again. So look for operators, people like myself and Barbara, who've actually worked in tech companies and know what it feels like and what a good company should look like, rather than folks who are just really good at giving you PowerPoint slides and spreadsheets.
Yeah. Barbara, I was going to see what you had to say about E's comment that financial service professionals don't know how to build companies, but you wear two hats. You're a financial service professional and an operator and entrepreneur.
No, and he's absolutely right, Leland, because that's why I decided to do it, right? And I studied engineering and computer science in undergrad. So for me, tech has always been in my core, but he's absolutely right. I am worried about, and not just in terms of operators, in terms of financial services providers or PE guys going into tech, but the founders are getting term sheets from some of these PE firms that don't really, they're applying the PE mindset to early stage companies. That's another conversation on its own, but I see that going on right now, and that's dangerous territory because I know what the PE mindset is, and it doesn't apply to early stage companies. But anyway, that's another offshoot of this conversation.
Yeah, I have a feeling we have a few of those. But I want to ask Barbara about how you are deploying capital. You mentioned that they're looking for market creating innovation. Mentions a bit about check size. Can you say exactly what you're looking for in terms of teams, in terms of technologies, in terms of how to deploy the capital?
Yeah. So for me, my mindset has always been about building infrastructure and open ecosystems and open platforms. So whatever company I invest in or whatever technology is being used, I really don't care, except the mindset and the framework and the approach has to be around building open platforms and open systems. Because I really do think that's how you create market leading, innovation, and that's how you create really scalable companies. So that's what we look for. We look for companies that are leveraging, open APIs, they're leveraging alternative data, they're creating local data, and they're using all these emerging technologies to create moats, strong moats around, and that can also deliver network effect. And we see that a lot in infrastructure, and that's why I've always played in infrastructure space. That's why I sit on the board of AppZone. I brought in an AI-driven identity company into Africa. For me, unless these infrastructure companies unless you're building this financial infrastructure for all these other digital companies to ride on, we're not going to be able to scale as fast as we want to scale. So you need identity systems, you need payment systems, you need enterprise systems, you need all of these nuts and bolts to enable this fluid digital economy. And I love those type of financial infrastructure companies. That's exciting to me. I love SaaS companies. I love B2B type companies. I love SaaS companies that have embedded finance, because once again, that's the core of Africa. It's financial services, no matter what sector you're in. I love marketplaces that also embed finance as well. So the core of everything we look at has to have fintech and financial services across the spectrum. We're not, you see, for us, and my mindset around innovation is not really about, creating the next, operating the next, laptop or something. I don't know, whatever that is. It's about a mindset. It's honestly taking whatever the technology is and being able to apply it in a way where it's scalable and where it becomes an ecosystem that everyone has to be involved in and everyone has to play. That's why all the big tech companies are winning, because they've created these really strong ecosystems that everybody has to participate in. And I think we need to start building companies in Africa with that mindset. The old generation, which is why I don't think there's venture capital 1.0. The old generation built monopolies, right? That's how Dangote made their money. That's how the banks make their money. It's through monopolies. But the new generation, we're building open ecosystems. We want to create a bigger pie. We want everyone to eat in the lunch. We don't want to just create the zero-sum game. And that's what is going to create and innovation drives that ability to create those innovative systems. So those are the type of companies we look for. And I've been working with companies and investing in these companies for the last 5 years, and I've seen the evolution. And the next 5 years is going to create another, the types of technologies being used, whether it's blockchain based or AI based. All of these technologies have been there for years, frankly. It's just how they're applied and the use cases that are being deployed. Like at Element, the technology was founded by Jan LeCun, who is a Turing Award laureate. He invented the sort of advanced machine learning, unsupervised learning back in the 80s. And that's the technology that Facebook and Google are using right now. So these technologies have been around for years, but it's how do we apply it? How do we create these identity systems that are open, that are interoperable, that allow you to scale really fast? That use case is what makes it is what's powerful. One of the things that we did is we partnered with Access Bank to create a merchant payment system using biometrics. And so when you walk into a store, you can use your face to make a merchant payment. But that only is able to happen because of the BVN, right? The one of the big things about the BVN is that it connects to all the bank accounts in Nigeria. So you can walk into a store, you can identify yourself through your BVN, and you can debit any account that you have, right? You can't do that in other countries. So it's
just to clarify for our audience who might not be familiar with the Nigerian landscape, that's the biometric verification number that the Nigerian government is issuing to all citizens.
Yeah, exactly. And so that is a sort of a there are about 40 million BVNs in Nigeria, but that development has allowed a lot of companies to leverage that infrastructure, right? And come up with really interesting use cases, like I just mentioned, around biometric merchant payments. That technology is there. It's applied differently in Nigeria because of the situation there, and because of the BVN and all of that. And that's what the innovation is. It's not just around technology. It's about how you apply it, the use cases, and the business model and the opportunities around it. And that's what is exciting to me. I'm not necessarily expecting any new groundbreaking technology that I've never heard of. I mean, honestly, a lot of things I learned in computer science really hasn't changed. And that was how many years ago? But it's how it's being applied. And that's what's exciting going forward. And the approach and the open ecosystem mindset that I'm excited about. Yeah,
very interesting. I'm curious to ask you more about the merchant payment system through Access Bank.
Sure.
But that's just another offshoot of this conversation. Before we end, I mean, we've got about 15 minutes left. It would be remiss to ignore the fact that we're living in a much different world now than we were when you guys set up these funds. I'll ask you both, how has COVID changed what you're doing? I'll start with you.
Okay. I mean, COVID's definitely changed quite a bit about how we operate. There was a few kind of interesting insights that have really kind of put us on this trajectory where we're trying to rebuild the capital stack. And I think the first thing was all of a sudden, I think a lot of people realized that they had more money than they thought they had because COVID kind of shut us up in our homes and made us spend less. And that they didn't have to leave that money in the bank. They finally had the time and the access to get involved in trading stock on Robinhood, or in our case, investing in startups through the collective by becoming a co-investor in the Future Africa Collective. So I think that was a big change. This massive decentralization of capital definitely changed a lot of things for us, and it meant that we were able to raise records amount of cash in the middle of a semi-financial crisis where institutional capital left founders high and dry. And I think that was kind of the biggest shift with COVID. But more importantly, I think it also forced us to reevaluate certain approaches to collaborating, right, and to building ecosystem and support. So, for example, we started receiving a lot of requests from funds all over the world who wanted to diligence companies, or companies that would ordinarily have made a trip to Nigeria to meet with other companies, but now we're unable to do so. And we were setting up meetings between groups of companies we thought were interesting and the global, the international community. It changed the market for sourcing, because now all of a sudden, you didn't have to be in California to be able to find the best African companies at YC. It actually now mattered more for you to actually connect with them on the ground where they would be, and see them early, because now you have access to them via Zoom or Google Meets. It changed the way we thought about helping companies, because before we thought we had to have a meeting with them to be able to identify what they needed and check in with them. But now, we can meet their whole team and work with their whole team, and be an integral part of their team. And most importantly, it changed the way we engage with our ecosystem partners and community members, whether it's government or whether it's large corporates, because now there was more of a hunger for the use of technology, and there was a need for us to be able to advise them on the right way to leverage what exists to be able to digitally transform. And that became very, very important to companies, because all of a sudden they needed to scale pretty ridiculously fast and to meet the demands. And a lot of our companies were able to do so with great leadership. It really showed us the importance of great leadership and talent at the helm of these companies. So that was a lot of big lessons for us out of the COVID period, and huge opportunity, particularly as we go into a world with extremely low yield and an overflow of money that's being printed by the central banks. You're muted.
Sorry. Barbara, I'm going to have to prevent you from answering that, unfortunately, even though I'm really curious to hear.
Sure.
I'm being reminded that we've gone over our time and that you're actually moderating a session now on fintech-enabled health tech platforms. So we'll switch over to there. But I just want to say thank you, guys. This has been a really, really fascinating conversation. You two are the most dynamic, interesting entrepreneurs, investors out there, and I'm really grateful to have your time today. Grateful to call you both friends. So thank you guys very much, Barbara. Really appreciate it.
Thanks, Leland, for having us. Thank you very much.
Thanks, guys. Yeah, take care.
Bye.
Bye. Hey, Barbara.
Where do I go
I'm sorry.
now?
I'm getting yelled at by everybody.
The WhatsApp messages. I'm like, oh shit. Where do I go now, Leland?
Let's see. I'll find out. Okay, I think Barbara is going to send you a new link. I don't know why I had it in my head that we had until
9:25, right?
9:30. That's what I thought.
Me too. Because I thought my session was at 9:35.
I think we've kind of screwed up our times. I've screwed up the times. I was trying to hand this off to my team. They were basically running the event this year, and I'm like, no, there's one panel that I want to do, organize for myself, and of course, it's the one that I do a terrible job. I get the times wrong. I give you guys late notice.
No, it was great. Thank you, and it's always so nice talking to you. You're so good at doing this stuff.
Oh, well, I'm glad you say that. Next to you guys, I feel like a stammering idiot. You guys are really articulate advocates.
No, and it was a good panel. I got lots of messages. Are we on? Are we live? Love it.